Hey everybody, this is Jay from Byte-Size Politics. Today we're going to be talking about what law professor Glenn Reynolds refers to as the higher education bubble, and specifically the way in which students, naive young students, are taking on huge debt loads in order to pay for high administrator salaries, college athletics programs, and Wall Street profits, all while the quality of teaching actually declines.
I'm wide awake, but you're a nightmare.
People like to make fun of millennials, and let's face it, some of it's deserved. But the fact is that you guys have been screwed in a multitude of ways. And one of the biggest ways is the student loan racket. Right now, Americans owe $1.3 trillion in student loans. That's 3 times higher than it was just in 2004. And since 2010, we actually, as Americans, owe more on student debt than we do on our credit cards or on our auto payments. The only type of debt that we have more of than student loans are home mortgage payments. In addition to that, 14% of all student loans right now are in default. And that's double than what it was just 4 years ago, despite the fact that we've been in a good economy for the last 4 years. So nationally, about 7 out of every 10 graduating seniors have student loans when they graduate. And the average debt load is $30,100. So we have to ask ourselves, why are people taking on so much debt and what is it paying for? Well, the most obvious thing, of course, is tuition and fees. And if we look at the United States and compare it to other industrialized nations, we're paying much more for a year of college than students in Germany, France, or the United Kingdom. About $10,000 to $12,000 per year more than they do. And I don't just mean out of our pockets. I mean that if you take what our government is paying and what we're paying, either out of pocket or in loans, it costs roughly $10,000 to $12,000 a year more to go to college in the United States than it does in those countries. And there's no reason for that. And if we look at the rate of increase over time, even adjusting for assistance and tuition waivers and everything else, college tuition at public 4-year universities has gone up 78% from 1987 to today. And that's in constant dollars, adjusted for inflation. Now, 78% sounds like a lot, but it's a great deal when you think about the fact that healthcare has only gone up by 50% during the same time period. But yet everybody's freaking out about healthcare costs. But since you're paying 78% more for college than people in a generation ago, you must be getting great education, right? Not hardly. The fact is that back in the 1970s, when you could work a summer job and use that to pay your tuition for the entire year, and when the average family worked 13 weeks to pay for a full year at Harvard. Nowadays, it takes an entire year to pay for a year at Harvard. 57% of all of the professors were either full-time tenured or at least full-time faculty. Nowadays, a majority of your teachers, when you go to college, are either graduate students or part-time adjuncts. And there's nothing wrong with adjuncts. I was an adjunct. I taught college history for a couple of years and absolutely loved it, loved my students. But the fact is there's no way that I knew as much as a PhD professor. And it tells in the numbers. For every 10% increase you have in part-time faculty versus full-time faculty, you have a 2.7% decrease in the number of students that actually graduate with a diploma at the end of their education. So if schools aren't using your money to pay for professors, where is the money going? Well, a lot of it is going to college administrators and other educational bureaucrats. Since the 1970s, you've had a 50% jump or 56% jump in the number of students in college in America. You've had a 50% jump in professors, which means that the student-to-teacher ratio has actually gotten worse during that time, even while college got more expensive. You've had an 85% jump in the number of administrators, deans, assistant deans, and everything else. And you've had a 240% jump in the number of non-teaching administrative staff. And remember, administrative salaries are higher than professors' salaries. So basically, when you're paying your high tuition cost, you're paying for the new BMW 5 Series for the assistant deputy backup dean for student speech regulation. You're also subsidizing sports programs. Now, there's this myth that college football programs and basketball programs subsidize everything else. But that's completely nonsense. The NCAA looked at 1,200 schools in their system, and out of those 1,200 universities and colleges, only 24 of them had self-sustaining athletics programs. Every other school is relying on student fees, and those fees keep going up each year to subsidize the program. James Madison University is a perfect example. They have a $47 million a year athletics budget. $34 million of that comes out of student pockets. If we look beyond that, another problem is rapid building expansion. Since 2012, we've had a 1% increase in the number of students in college and university in America. We've had a 14% increase in the amount of building space. And so schools have been building luxury dorms, cafes, fountains, all sorts of big stadiums and everything else, all in this what they call the amenities war, where they're amenities arms race, where they're competing with other colleges and universities for out-of-state students and high-paying international students. And you're footing the bill for that. And these colleges are going deeper and deeper in debt in order to fund this arms race that they're having with each other. And to the tune of just the interest alone on the debt that they're acquiring, the average public school student is paying $750 a year just to finance the debt. The average private school student is paying $1,300 a year. So that's a big chunk of your tuition right there. Even worse, universities are notorious for using risky, expensive financial instruments in order to fund these building programs that they're doing. Interest rate swaps are one of the big ones. And a Roosevelt Institute study found that 58% of colleges that they looked at had used these risky financial instruments. And just 19 schools alone had racked up $2.7 billion in unnecessary fees that were then passed on to either students or taxpayers. So to sum it up, you've got young people taking on huge amounts of loans in order to pay for college administrators, reckless building programs, and Wall Street profits. And that's messed up. Now, maybe you'll say, oh, well, this is probably the reason that tuition is going up and students are taking on so much more debt is because federal subsidies have been cut. That's simple nonsense. The National Bureau of Economic Research looked at between 1987 and 2010, and they found that there was only an 11% decrease in the amount of subsidies per student. So about $500 per student per year had decreased in the federal budget in constant dollars adjusted for inflation. On the other hand, you had over a 70% increase in tuition and fees for students. So it's total bunkum, the idea that it's a cut in subsidies that's driving it. It's out of control spending that's the problem, and the way that universities and colleges farm you for your student loan money. Here's how it works. So colleges and newspapers read the same newspapers you do, if you still read newspapers, or the same internet websites, but they're aware whenever the federal government raises the cap on student loans. And so all they do is they adjust their fees. They know that you are now worth, if you were worth $5,500 a year before in student loans, now you're worth $5,800. So they adjust their fees and tuition to suit. The New York Board of the Federal Reserve found in 2015 that for every dollar rise in the student loan cap, the amount that you're allowed to borrow, there's a 58 to 60% increase in tuition, increase in tuition, and there's an 11% drop in the amount, a 20% drop in the amount of student assistance that they give you, financial aid that they give you from the university. So 78 cents out of every dollar is completely eaten up and benefits you not at all. But now you've got an extra dollar in debt that you didn't have before. Using students and young people as a piggy bank for college administrators and Wall Street profits is messed up. And it's wrong on a couple of levels. First of all, kids are poor. And so this is essentially a regressive tax where you've got young, poor people without any capital that are being farmed for money it's a wealth transfer to middle-aged bureaucrats, administrators, and Wall Street bankers. In addition to that, you've got the fact that kids are dumb. And I don't mean dumb in an intellectual sense where they're bad at processing things. What I mean is that their risk-reward centers in their brains are still underdeveloped. And so they're being asked to sign on the dotted line for tens of thousands of dollars while their brains are still learning how to weigh these types of decisions. One thing about young people is that they're given to impulsiveness. And so they don't think through things before doing it. And if you don't believe me, do a YouTube search for dangerous stunts gone wrong and look at the average age of the participants. Second thing is that young people are bad at looking at the big picture. Their brains are much better at focusing on specific details, but they're not able to yet process things holistically as well as older people can. And then the third thing, and this is the most important one, is that adolescent brains tend to overemphasize the positive potential outcomes in a given situation or decision and downplay the negative. So they're not getting a proportional understanding of the actual risk and reward for things. And so it's extremely wrong, especially because what you have is they make it so easy for you. They wave tens of thousands of dollars underneath your nose, and you're expected to sign this, and yet you're stuck with it. Because the fact is that student loans are a lot like herpes. You are not getting rid of it. It's auto loans, house loans, commercial loans, just about any other type of debt can be bankruptcied out of. But student loans are for life. People blame millennials for not growing up. And the truth is that, you guys have delayed a lot of things and have pushed adolescence well into your 30s in many cases. But the fact is that student loan debt is a big part of that. A widely reported bank rate study found that 56% of all millennials have delayed major life steps, such as getting married, buying a home, having children, getting a car, because of student loans. And so now, does this mean that I think that student loans are a bad idea or that college is a bad thing? Not at all. College is an absolutely necessary rite of passage for most white-collar jobs these days. And so, yes, you need to go to college. The problem is that because it is the new high school diploma, you don't have a choice about going. And so it's completely unfair that you're being made to pay these exorbitant fees for what is essentially a high school diploma in this day and age. So how do we fix this? I think the most important thing is for public universities to return to their original mission, which is giving a quality, affordable education to poor, working class, and middle class kids. Cut the frills, cut the amenities, give people the degree that they need so that they can move on with their life with a minimum of debt hanging over their head. Leave the fancy dorms and the cafes and fancy stadiums and everything else to the posh rich kids' schools for the people who can afford it. Public schools have one job, and that's getting people of modest means the education they need so that they can move up the chain of society. The good news is that we're seeing some progress on this. New Hampshire, Florida, and Texas are all experimenting with what they're calling the $10,000 bachelor degree. It's a no-frills college degree that gets you exactly what you need. Also, there's a big move toward online education and other forms of disruptive technology that are changing the education model. Because let's face it, the brick-and-mortar traditional university has its roots back in literally the Middle Ages and the Renaissance. And we haven't really adapted the model much since then. And so I think it's time to look at what is it we need in a 21st century high-technology society. In a digital society, what is it that education needs to look like to give people the skills that they need in order to move forward in life? Unfortunately, in the meantime, we're stuck with the system we have, which is administrators and educrats know that they're the gatekeepers to middle-class life for most people, and they're making you pay through the nose for it. And that's messed up, and it needs to change. So if you've enjoyed the video, and I hope you have, please like and subscribe, and check back next Thursday for another Byte-Size video where we make sense of contemporary politics. Until then, have a great week.